August 1st, kicking off a brand new month. Let's go ahead and get started. First things first, we're going to say under is risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether trading stocks, options, futures, forex, cryptos, you know the deal. All right. If you're following me out there on social media, make sure you're following the real me. YouTube.com/Chris Pulver. Other handles, real Chris Pulver. No underscores, no numbers, no double letters. I'm not direct messaging anybody. I'll reply to your messages if you contact me first, but no solicitations, no crypto crap, scams, whatever. Block those turds, get them off social media. Okay? All right, let's get into the charts. Here we have an economic calendar. This is what's going on this week. It is the first of the month. So, welcome to the end of summer, I guess. We should see some pretty interesting volatility this month. I think that the market's had a pretty solid week the last couple of weeks. I'll show you the tail of the tape here in just a moment. But this week in Forex, we do have a bank holiday in Switzerland. So happy Swiss National Day. I hope they stay on Swiss National Day for the next 6 months so my Euro Swiss gets some profit. Canadian holiday. What do we have here? Civic Day. Happy Civic Day, everybody. And we have some ISM numbers coming out of the U.S. at 10 a.m. Eastern time. So we'll look to see if the ISM number comes up above or stays above 50. That's a good sign. If not, that's an additional sign of a slowdown. U.S. GDP last week printed a negative number. So officially we have that technical contraction of 2 quarters. Maybe it's a soft recession. The Fed raised rates 75 basis points as expected. They're expected to be at 3.25 to 3.5 by the end of the year. All this was forecasted. The market reacted favorably to it. I don't know why, but the market's been responding pretty favorably to the Fed for the most part after some sell-off cycles. But anyway, the SPY's up, 12%, 12.5% from the lows in June, and we're going to see if there is some merit and some continuation to it. I think now we're at a bit of a turning point where we're going to see what the bear market is made of. If the bear market rally is absent, I think we've officially turned the corner, and we're going to start referencing those 1962, playouts for the second half of the year, 1970. Which I have right here. I'll show you in just a moment. CPI data coming out this week for Switzerland. Let's see, ISM numbers again on Wednesday for the U.S. We have cash rate decision out of Australia expected to be another 50 basis points hike. That is Tuesday at 12:30 a.m. So again, central banks continue to raise rates and tighten with inflation front and center. Employment news quarterly for the New Zealand dollar shows up some volatility around the Kiwi. That's Wednesday's trading day, 6:45 p.m. Eastern time. Wednesday, like I said, CPI ISM out of the U.S. Thursday, Bank of England, super Thursday for the Bank of England. We have a monetary policy report. We have the official bank rate votes. Forecast right now is 50 basis points of a rate hike with a 9-0 expected vote. So a unanimous vote for raising rates, which is what the Fed did last week. If that's the case, I'd still like to see additional dollar correction. Traders in my flex room, we've been talking about it for weeks, actively looking for opportunities to see a top in the dollar index, see a bottom in the euro dollar, look for opportunities for the yen crosses to rebalance, which certainly seems to be playing out over the last couple of days. We've had some really nice yen strength, and from the technicals we're looking at, I hope it continues. All right, that gets us through Thursday, and then Friday we have a double whammy of non-farm payroll for the U.S. and CAD employment as well. So if you would like to, I will start my YouTube session at 9 a.m. Yeah, we'll just do 9 a.m. I mean, we're not necessarily going to jump in and trade non-farm. I was going to say we could do a bonus session, but I'll just do a 9 a.m. live session like I usually do. And we will digest the CAD and the dollar on Friday. Okie dokie. All right, let me get logged in here to YouTube and say hello to everybody. Here's where we're at for the year. Markets have been clawing back. The Nasdaq's been down as far as 33, 34%, clawed back to negative 20.8. Tech is still, in some rough waters, in some hot spots. There's some recovery, but Snapchat a couple weeks ago, Meta this last week. Meanwhile, Apple's done really, really well. Amazon's done really, really well. Retailers, Walmart, Target, others have been dragged down a little bit, but Walmart jumped right up and filled that gap within a couple of days. S&P down as far as 23, 24% for the year, has clawed back. Now it's down 13.34. Again, referencing 1962, referencing 1970. We're going to see what this market is made of. If it wants to fight back for the second half of the year, it's a good time to do it. Okay, Dow was down. I think at the deepest point, Dow was maybe 17 to 18%. It didn't quite cross 20, but we're at 9.61. The 10-year was as high as 3.5. We're back down to 2.651. There's a nice head and shoulders pattern that looks bearish. Excuse me, on that 10-year Treasury and government yield. Bitcoin over the weekend still hanging up above 20,000. We're at 23.6. That's as of probably Sunday's close. I think it should be, but we'll check Bitcoin here in a moment. And then Amazon down 19.05 for the year, but was down as far as 35 to 40%. Apple, I don't think was down that far. I think Apple was down about 20% and has since clawed back with a pretty nice rally. So that gets us caught up. Let me get logged into the YouTube page, say hi to everybody, and off we go. Hope you all had a great weekend.
What if you could create the tools you need for work yourself?
Let me give a shout out to Tony Finau for back-to-back wins on the PGA Tour. We went to the Rocket Mortgage on Saturday and soaked it in, which was a lot of fun.
With Monday.com.
And he and many others tore up that golf course. So, all right. Don in the house. Happy Monday. John is here. Steve is here. Daniel's here. What's happening? Hit that like button. Yes, thank you very much. Chris is here. Gary's here. John, Jason, Jan. A lot of J's. Nice alliteration for the morning. David, what's happening? Andrew, good morning. Dennis, good morning. Wayne, good morning. Marilyn, Perry, good morning. All right. Let's see here. The market has tested my long-held belief in technicals. Some of the Forex technicals not making sense did a couple of years ago. Yeah, I agree, and we've talked about that in the flex room. I still think that it's going to make sense. You know, we obviously might stretch to further extremes. We might. It might take longer on some of these bar counts and reversions. But look, if you think that the technicals don't work, then look at the stock market in 2020 and 2021. You know, 2020 was a crazy anomaly type year, but look at the technicals, what happened in late 2021 into 2022, all the alignments were hit. You know, you stretch away from that 200 EMA, you start to get these big parabolic and one-sided movements and inefficient trends, market balances. Forex, surprisingly, has been really trend friendly and created the same type of inefficiencies. Again, it's taken longer than I expected. We had a lot more trends this year than I anticipated. I got stuck in some pretty ugly positions. Not that I didn't really like them, I just couldn't necessarily keep the position sizes and the builds that I had. So I had to scale out, keep my margin at the ready, and start looking to add on confirmation when prices going my way. And it's required me to take some losses and be way more patient, and then start looking to add to my winning positions to make sure I can make a full recovery and then some. But again, we've spent a lot of time talking about it, and it's been a frustrating year from the standpoint of trading highs and lows and trading major structure. We're sitting at these 20, 25, 30-year highs and lows, and to really not see the market react to that like it normally would, yeah, it's been different. But again, the saying is it different this time? The pockets, the pivots, the inefficiencies that have played out year after year after year, maybe it takes a little bit longer, but I still believe that they're going to get filled. Those liquidity levels, those transaction levels, those efficiencies, they'll still get filled. You know, it just makes you wait longer. And I wouldn't be surprised if this year a lot of retail traders and institutions, for that matter, either their pockets weren't deep enough or their patience ran thin. And I happen to be in kind of the second boat. You know, my patience is run thin a little bit, but I also know that I'll stay the course. I can tear out and take losses and know that if things go my way and things correct and start showing confirmation, I'll get back in and rebuild positions and make it back. You know, that's trading. So there you go. One thing you learned was trade size. Well, that is definitely the saving grace. And honestly, that is the most important thing in trading. Your trade size, your risk management is the most important thing. You want to trade big, you want to use margin and leverage? Great. Can't afford to take big losses. You want to trade small and trade almost insignificant levels? You want to build a portfolio with a lot of consistent wins and high win percentage? You can do that. Small trade sizes, small risk. You never have really any emotional connection to trades. You just trade, you know? So anyway, all good. What's up, Ray? How are you? Good morning. Jose, good morning. Willie, good morning. Joseph, good morning. Jeremy, good morning. All right, nice little crowd here today. Again, one more time, keep that saturation going with that thumbs up button for me. I know we'll get about 50, 60 people tune in live, and then there's about 200 or 300 people every week that watch the Mondays and Fridays. Channels steadily growing, which is good. You know, I'm not out there promoting and spending Google ads. Let me just buy more people. It's like, no, I mean, I want everyone that comes in, engage, leave me a comment, like the video, let's spend some time together. That's what this is for. This is for free, right? But your ability to spread the word and help that, help the channel with the little YouTube algorithm, all it takes is a little thumbs up. Cool beans. All right, so we're good on the calendar. Let's get back into the charts. Here's the currency strength chart for the morning. Just going to refresh this. We had the JPY on top for a little bit, and it's jumping up once again. Not complaining. So we're back up near some of those highs. Yen jumping, pound is up, dollar is down, which I like to see. I think the dollar correction makes a lot of sense. Bar counts across the board, DXY, US dollar, euro dollar, dollar yen, ridiculous. Yeah, and actually the whole yen basket sets up for a pretty nice move. We've literally talked about it for the last month or two. We've been waiting for rising wedges and watching patterns play out. I think the pockets that are available look good. I think the amount of volatility that will take to show the yen strength could be way shorter lived than what we think. We'll look at some of these yen crosses here in a moment, but I mean, we might see some yen pairs with 2, 3, 4 big days of volatility, and they're coming right back down to those EMAs we've talked about, right down to those pivots and pockets we've talked about, and just be ready to move stop losses to protect profit. Look for bear flags, look for opportunities to sell, because I think we're in the midst. And I did say that August is typically a top and bottom month. August is a nice transition month, and so far it looks like it's playing out. Okay. All right, good stuff. Okay, so let's talk yen pairs for a moment. Where are we at? Here's the dollar yen. We are safely below this 50 EMA. This is a good thing. Okay, we have been actively looking for this 200 EMA and this previous low to get hit. That's around 120, 128, 126. Now, I really think that this could happen a couple of different ways. We could be breaking this EMA now, we get a pullback to this monthly pivot, and then we continue to flush down to that 200 EMA and have a bit of a 1, 2, 3 type correction. Okay, this could also play out where this just continues to plummet down to this 200 EMA, still has a pullback, and then goes one more leg lower down to 120 or 118. Obviously, if this happens, I mean, that's an extra 500 to 600 pips worth of movement. What I'd like to do is take some profit here. If this first happens, if we hit this 200 EMA on the daily chart, I'd like to take some profit there and then take a fresh position on a sell-off again, if we get it. Okay, so let's take a look really quickly at all these other yen crosses. So Aussie yen, how's it doing? Aussie yen is starting to show the signs of a bit of a break, but I said this last week. We want to be careful on this just in case there's one more attempt to get up to these highs. Okay, so for example, if the dollar is weak, we can see the dollar yen correct a lot, and we could see other pairs go sideways, right? If the dollar is weaker, we'll probably see gold stay bullish, silver stay bullish, equities go up, Bitcoin go up, and go ahead, anyone that's watching here, how long have we been talking about that correlation? A month? 2 months? Getting ready for that transition, getting ready to see if the market's going to fight back, if the stock market's going to go from negative 20+% down and finish at negative 10, finish at break even for the year, finish highs for the year. How crazy would that be? Think about the emotional roller coaster the markets have been on to somehow find a way to carve out a high this year. Pretty nuts, right? It can do it. It can also just fight back. It can also go lower. But I think there's enough going on right now that, again, you have to remember the market's forward thinking. So if the market's able to price in the fact that the Fed is raising rates, has priced in the kind of extent to which the Fed will be raising rates, and then going into next year, not really raising rates, guess what the market starts to do? Move on it. If the recession to contracting quarters was priced in by the market, guess what? Starts moving elsewhere. So yeah, exactly. Gail says a month. It has been. That's just in my trading rooms where we've been actively looking for some of these trades. So Aussie yen, watching closely, right? CAD yen, falling wedge, or I'm sorry, rising wedge, my mistake. Rising wedge, same structure. I'm looking to sell the CAD yen. So we have this structure breaking. We took some sells on it already at 106, 105.90, 105.70. We had another chance to sell it last week. We're now down below the 50 EMA. Here is that either rising wedge at the top or even like this, kind of more of a steeper rising wedge, just in case if we have some volatility in these yen crosses where we get this aggressive sell-off for 3 days, we get a pullback into this pivot or a pullback into this, resistance at the rising wedge. I'm still looking for this move back down to that 200 EMA, and anything close to these pivots. This is a fantastic pivot alignment. We have like 13 or 14 daily candles in a row. It's insane with 3 weekly pivots as well. So this low, this pivot cluster, all the way down to, I mean, parity would be fantastic. We get to parity at 100, great. But we find even this first available weekly pivot, that's all the way down to 96. That's 700 pips lower. Okay. So there's a lot of opportunity to look for some good volatility and short-term trends right now in those yen pairs. Swiss yen. Swiss yen is starting to drop as well. Another one I'm watching very closely. We break this 50. I'm looking to get down to this 200 EMA. Let's see if we can take out this low. We might have a pullback here and set up a crown pattern and then have a movement back down to set up a larger crown or head and shoulders. But if this is actively the top or getting to start the top, I, for one, would like to see this structure play out, right? And meanwhile, I'm in the trade. I've been scaling in, got a couple of nice positions here at the highs. I've taken some losses on Swiss yen along the way, but if I can get back to this level, we're going to be right back in business, you know? So all the haters out there were like, I can't believe we're still in trades from 120. Yeah, I know. That's why we closed them, because they were sucky to hang on to. So we closed them. We added back up at 136. We added here in the 140s to 143 area. And now my break even's like 138 and change. So if I can get this trade down to 128, I'll clear 1,000 pips net position on a big group trade that I'm still holding. So that is the plan. Okay. All right. That would be nice. That's Swiss yen. Euro yen. Euro yen's already been on its way down. Again, might have some more room to the downside. Watch and see what the yen does. If we pull back to this little pivot, great. What I'd kind of like to see would be this. Maybe we come down a little bit lower, score a point right here, pull back, and have one more sell-off back down into this breaking point, and then we see what this yen is made of. Does euro yen jump hard, or does it break and go much further down? So this one has already fallen enough. You know, this level, this low, I wouldn't really call that a crown because we had an equal high. But if this is it's really just a fudged up looking pattern. Like this isn't even a double top. This is just an ugly looking pattern. It's a high, low, lower low thus far. We could have another lower high and another lower low, and we'll see what that's made of. But right now I'm still long Euro yen as a hedge. And what I'll probably do is my buy trade was up here, just in case the yen was going to go parabolic and ballistic and just keep, pissing everybody off. So I'm still holding one small trade. I will probably end up adding a trade here, small, and adding a trade here, small. And so I know this trade size. I'll take 2 different trade sizes. I'll build my net position somewhere in here. And if price moves back up, I'll take a break even or better and not worry about it. But I'll just work my way through that trade. I'll work my way through Aussie yen if I have to as well. That's euro yen. New Zealand, actually pound yen. Pound yen should also be a nice little sell trade. If it's volatile, we pull back to the monthly pivot. It's a fresh one this month, starting today. We pull back into 166. We pull back into 168. It's fine. Let's see here. New Zealand yen. I'm a little disappointed on this one because we were looking to sell this nice and high. You can see equal highs right in here. Just didn't quite get it. 87 didn't quite get hit. So now it's at 83 and change. Maybe we have a sub range in here. Maybe it pulls back a little bit. Maybe it pulls back all the way, but you can look for a sell trade right up around 86 to 86.50. Trade this little range on New Zealand yen. There's should be room to come back down towards like 80. So looking for a nice little resistance range, 87 down to 80. That's the 700 pip range. A lot of opportunity right there. And then like we started, the dollar yen drop like it's hot, right? 4 really nice days of bearish, 3 with a lot of volume in the, according to the language of the market with the candlesticks. Drop as far and as fast as you want. I'm still at this 360 plus bar count on the daily, looking at this low here at 126 and change. If we don't really have much of a pullback, I'm just going to see if it drops pretty straight down into this 144 and 200. Okay, that's my first target for profit. If we have another pullback and another fade, I'm looking for this thing to go even lower towards 120. Right, and in fact, I'm not joking. I might be out of this trade with profit after taking some small losses. I dragged this trade from 120 all the way up to the highs. I closed out some crappy positions. I wouldn't be surprised if we come all the way back here towards 116. And everyone that's been griping, everyone that's been complaining, oh my gosh, the yens. Look, I was complaining too. The yens have been brutal. Okay, we've a 3,000 plus pip move with nothing more than a hiccup. That's really difficult. The technicals make it seem like they don't work anymore, but this is what a rebalancing looks like. So if that is the case, experience the rebalance, charts and technicals realign, everything starts to make sense again. Hopefully, we're able to make some profit. Okay, very good. Yep, already up 126 pips for the, yeah, perfect. It's a nice way to kick off the month, yeah? All right, let's go dollar crosses really quickly. DXY dropping nicely into this 50 EMA. I'm still looking for dollar index to correct. We have a really nice stretched move into this 200 EMA. Same thing with the daily chart on so the DXY and the US dollar. Both of these looking pretty promising. The US dollar is below the 50 EMA. You can see here it's stuck between a couple of pivots. We have a July pivot, we have an August pivot. Does it bounce here and use this as resistance to then sell back off? There's a daily bar count right there on the 200 EMA and this low. Let's see what the dollar index wants to do. I hope it's ready to correct in a big way. It's time. The month of August is a very solid transition month historically, tops and bottoms form. And we've been watching this too. Tarek is a trader in our flex room that's been commenting on the commitment of traders. Super high percentages, a super high percentage of commitment of traders long on the dollar. 80, 84, 88%, 85%, crazy. I mean, that's a contrarian signal at some point. And it looks like now, if we really turn the corner and we kind of get this pendulum shift, we could see some really nice movement anti-dollar right now. And again, a dollar weakness move to me is a catalyst for equities to continue to rally. So that's an optimistic sign moving forward in the stock market right now. Everyone that's been so concerned, I think we're getting through some really big levels where the resistance of the bear market isn't necessarily holding. And if that is the case, I think it's a good time to be bullish and see some green in the portfolios. Okay, so that's dollar index and DXY. Let's see how it correlates. Let's look at U.S. oil. Okay, oil is down to 94.17. Most of this, I think, this is also attributed to the lack of demand or the lessened, reduced demand in China right now, if they're still in lockdown. Crude oil futures, same thing, down to this horizontal support. Now, do I think it's going to stay pretty supportive? Yes. I don't think we go too much lower than $90 here. If we spike down and hit $90, I see us going back up. So I'm long energy stocks for this reason. And again, energy stocks not at highs, but off of these, big pullbacks we've seen. We've seen some violent pullbacks with some of these corrections. If you go to a stock like Halliburton, okay, big drop off this, nice high all the way back down. I mean, that's almost a 50% drop within a matter of a month. That is almost a 41% drop in a month and a half. That's a lot, right? All this started to align. Q1 was led by energy. Q1 was led by materials. And then April dragged everything down. Then there's a recovery in tech a little bit in May and June. June continued to slide lower for some, for most. But July has been fighting back. You go to the SPX. SPX for July, we fought back pretty nicely. Right? Look at this. We broke through the 50. We went all the way up towards this 144, 200 EMA combo. We're back to this high around 40, 200. We're close, 4130 on the SPY, the S&P. All right. Now, is this enough? Is this enough? Is this now, like I said, the bears' resistance is now. If the bears, and what we could see here is again, it's summer, right? It's August. We could see the market, slowing up a little bit and transitioning. And then we'll figure out what September, October brings. I could see the market still fighting through this. I could see the market having some more uncertainty going into the election. I will say this. If we fight through it, I think the market's going to finish at or near these highs for the rest of the year. And there's not much that's going to stop it. Okay? If we slide lower, I could possibly see a low, higher low on a range, and maybe a fake out here, and then we still rally for the year. I said I'm going to make reference to that 1962 second half of the year, 1970 second half of the year. Here it is. This is 1962. We bottomed. We rallied out of summer. We had a August, September, October dip going into the midterm election, and we still fought back through the election November, December for a Santa Claus rally, holiday rally into the end of the year. Now this was down 20+%, finished negative 11.8. Cut it in half, right? 1970, we bottomed in May. We had a summer pullback, another pullback, but higher lows, and the market finished all the way back up to where it started with a 0.1% positive gain. Somewhere in between this, between 62 and 1970, these two to me are pretty good correlations of what we have. Now we've seen interesting peaks in the Treasury yields. The 2-year Treasury yield with a peak has correlated with the bottom in equities. We've seen CPI peak with a bottom in equities, and I think right now there's a combination of a lot of those things. There's like 5 or 6 years that actually we've had something similar play out to what we're experiencing in 2022. Again, I just keep going. I go back to the market is forward thinking. Okay. The market's forward thinking. If the market is successfully priced in the Fed rate hike cycle, if the market is successfully priced in a recession, if the market successfully priced in the pessimism, it's ready to turn the corner. And there's a lot of money sitting on the sidelines, hoarding fund managers, hoarding banks, hoarding institutional money. There's forced buyers in 401ks and pension plans and fixed income. Okay. So there's money to be put into work. And right now, I mean, China's the wild card. If they want to come back and get online and open up again, then there's more demand in everything and there's more money flow. The M2 keeps growing, but that's a to be determined. But I can see the US fighting a little bit. Eurozone is in a bit of trouble. We know that, but doesn't mean the dollar can't soften. That's one thing that, again, people could be like, oh, the Eurozone's doomed. Well, the dollar could weaken because equities want to rally and risk appetite's going to happen. The entire global market cap, by the way, 46% of it is all U.S. equities. So it's a pretty big market. Everything else is a sliver of that to make up the whole pie. All right. So I keep, this is now 3-4 weeks I made reference to these charts, but this is a pretty good sign to think about first half of the year, second half of the year. It could be a very different outcome, right? But emotionally, it feels like, oh, it's all the same. It's all bad. It's all bad. It's all bad until it's not. It's all good. It's all good. It's all good until it's not. Somehow, as traders, we have to pivot, you know, and trade what we see and trade the technicals. That's how we make decisions. So, all right. That is it from that side. I'm going to go into my notes really quickly. I was reviewing the portfolio on Friday. What do we have here? I was going through. Let's see. I'm going to have to add some new covered calls. Alibaba, Delta Airlines, FXI is large cap China Tech, Google, MARA, Meta, MicroStrategy, SVXY. Did I lose my stock of SVXY? I don't remember if I did or not. Let me see here. I think I closed it and pushed it. Let me see something here. I thought I opened up a new covered call on SVXY or I took the money. Let me find out. SVXY. Okay, so I ended up getting it called away at 51.50 for, let me do the math here. So 51.50 minus my break even is 43.60. So I made $7.90 a share. It's a pretty good chunk on 1,000 shares of XVY. Pretty happy with that little chunk of profit from last week. I'll take it. Did anything else get called away? Delta Airlines, I believe, got called away from me for profit. We drilled the cost down here on Delta Airlines. I had a 31.50 covered call. Actually, I take that back. It did get called away. My covered call is for this Friday the 5th. Okay, so if it stays where it is, my break even is 28.06. And I feel like I rolled this. I will confirm today in class. Aha, so I did. Yeah, I did. So I rolled it out to this week, lowered the cost down. Yeah, so that should be right. 28.06, which gives me $3.44 of profit per share. Not a bad play there too. Yeah, Chris, I don't think that's going to happen. I think that China is trying to prevent the delisting from happening, especially with big stocks like that, like Baidu and Baba, and I mean some of the even like the K-Web and some of the other ones that are like China-based ETFs. If it does happen, I don't think it's happening anytime soon. But right now, if you look at a stock like Alibaba, China's a big part of it, right? We're down to $89. Here's the reality. I mean, we did take a trade here. It's a 105 by 100. That's a credit spread on the 19th of August for that expiration. Look, we pushed this out to December. Okay, so we're not going to lose on August 19th. We've already rolled this out to December. And we did it for a credit, by the way. Okay, now what I'm interested in is if we came back down into the low 80s, let's just do another credit spread for a similar expiration. And if we get paid on this one and somehow there's a rally to the end of the year, we get paid on this one, cool, profit, profit. But if we get paid on this one and we lose on this one, it's a wash and we don't lose any money and we'll make money somewhere else. Make sense? So we'll be watching. But I've talked about some interest in China tech and a recovery. 33 fiscal policy. It's monetary and fiscal policy going into work 33 different ways. That's a lot. The difference right now is they're just still very strict in their COVID restrictions. I mean, even the U.S. that we're seeing, hot spots in the U.S. with more cases, asking people to wear masks in public again. So it's not going anywhere. I know there's more variations, mutations, but I think mentally we're just over it. You know, if you're vaccinated, you're not really that worried about it. I'm sure there's going to be annual boosters and all that fun stuff. That'll be another hot topic to debate about and people can disagree about. But the difference is, we're not shut down anymore. So it's like trying to figure out what the normal is. Anyway, we don't need to talk about that right now, do we? So anyway, I'll be looking at the equities portfolio. We don't have a lot of expirations this week. If I go into my doc really quickly for equities on demand, if I type in 8.5, I have 0 expirations. So this is for credit spreads. What I do have a bunch of are covered calls to continue to lower my costs or get my stocks called away. If the market's going to stay green, we have a nice little rally through the first week of August. Cool. I'll probably lose some more stock in a good way for profit. And hopefully with covered calls, I'm getting premium to get the stock called away, and I'll just find ways to get back in. Okay. All right. Any requests, any charts? We went through our yen crosses, our dollar pairs. Let's take a quick look at gold and silver. As the dollar's dropping, we're going to see gold hopefully continue to rally nicely. We're up to 1769. We started doing credit spreads here. I was buying gold around this 1700 handle. You go to GLD, I was buying it around 160. We had lows at 158. We had a 160 credit spread, looking pretty good so far. And we should have a couple of those space out to the end of the year. Silver as well. So unfortunately, man, that had to be so close last week. Holy crap, you know what? I just realized I was assigned more silver. Huh. Okay. We had a 20/50 by 20 credit spread. I just got assigned another 100 shares of silver. It rallied all the way back up to finish inside that strike, that 50-cent spread. So I took another 100 shares of silver. That's totally fine. Unfortunately, I didn't take a long put to lower my cost on those 100 shares, but I really thought I was just going to lose on the credit spread last Friday. But anyway, again, moving nicely against the dollar. The dollar's going to get softer. Gold and silver should rally nicely. And lastly today, let's take a look at Bitcoin. So even though the dollar's weak, even though equities is rallying, we're going to see if this will translate into some risk appetite with crypto. 24,000 has been tapped a couple of times. You can see some indecision the last few days. Ethereum at 1641. See how this correlates into some of our stocks. Coinbase is trading around 60 bucks. If anybody's still working with Coinbase, it's been a pretty good stock to pay us a ton of premium and get the stock called away. MicroStrategy is trading at 274. I'm going to go back in and look at another covered call at 290, 292, see if I can grab another 6, 7, 8 bucks. I am actively lowering my costs on MicroStrategy, where right now my break even is 278. From, by the way, a starting point of $500 plus. So thanks to options, without having to put out a ton of money and buy a $200 and some stock, I've lowered my cost from $540 to $278 in a matter of 200 shares. So not complaining about that, and there's enough premium on this thing to keep lowering my costs substantially. One that is related to the mining of Bitcoin is MARA. Keep adding some covered calls here, 1229. And I think I added some of these. I thought I did. TAL, DAL, SLV. Here we go. Yeah, so I added, here's what I did. I added some covered calls. So Mara added a covered call. ONB was rallying nice. We're in profit on that stock now. REI added a covered call. Uber adding a covered call. And Alcoa, I got Alcoa called away for like 8. Nope, I take that back. I added the covered call. I lowered my cost down to like $38 now on Alcoa. It's trading in the 50s. So that should be a nice one. And Alibaba, if there's enough premium, I'll try to get like $100. Yeah, probably $100, $105 covered call if I can. CSTM added, DBC added, MARA again added, ONB, that's just checking the stock. REI added, SVXY called away for $7.90 a share, so I can delete that one. So that's what's going on here. on my charts. Some stocks getting called away, some covered calls to lower my cost. Not a ton of expirations this week, which is good. Okay, it's a busy week. There's enough going on volatility-wise. Technically, I'm looking for more yen strength, only to see the technicals play out, and I'm really looking for dollar weakness. If we're going to see this summer rally, dollar's going to get weaker. The bar count's high. Look for that daily 200 EMA. Okay. Traders at the top of the hour, 10 o'clock, equities on demand. We'll see you there. If you're out here following me for the first time, or you're checking out the channel for the first time, if you're interested in some trade calls, some trade signals, some free alerts, you can join my newsletter, pulverreport.com. Click on this little button here. This is join my weekly newsletter. On Mondays, I send out a top pick, whether it's Forex, whether it's stocks, maybe it's options. It's something, but it's actually been doing pretty darn well. I just closed out a couple positions. Let me get my top weekly picks right here. And you can see that we've done pretty well. Winning trade, a couple of cancels, lots of wins thus far. We've got some stocks that we own. I took a loss here on a Aussie New Zealand trade, no big deal. ARC took a loss on that one for a credit spread, no big deal. Lots of wins, lots of wins, lots of wins. So we keep grinding, and we keep throwing out some really good free trade alerts. You can get that newsletter again, pulverreport.com. Just click on it, add your name to the list. If you're interested in some classes, my Perfect Storm robot trades 24/7. Well, 24 5.5 because it's Forex. So from Sunday night to Friday when the market closes, it's trading all the time. And Perfect Storm and Pockets Pattern Pro are two robots that are running full auto on anywhere from 10 to 20 currencies, and they're making profit every week. So that's a good thing. I'm not promising profit every week. Sometimes they sit in positions, but they have been pretty consistent. And Perfect Storm's been running for years, the last 2-3 years I think now, and Pockets Pattern Pro has been running for the last like 5 or 6 months, and they're great. So if you're interested in those, you can check out pulverreport.com, click on systems, inquire. If you are familiar with market traders, you can contact an educational specialist and ask them as well. Good stuff. All right. Wasn't there a huge gold find that just happened? Maybe. I don't know. In Nigeria, was it? I don't know. Possibly. So I was just assuming that the U.S. or China was going to show up and just be like, excuse me, we would like to commandeer this gold for safekeeping. Have you ever heard of Fort Knox? We'd like to take this off your hands and manage this for you. I don't know. Or we'll just steal it. No, I heard about something like that, but I mean that's where they mine it intensely, right? So I'm sure there's some discoveries that are bound to happen. But all right, traders, I'll let you go. Have a good rest of the day. Have a good week. Equities on Demand students Monday through Friday. Flex Room Tuesday, Wednesday, Thursday. Business as usual this week. Let's get to it. First week of the month. See you soon. Okay. Really quickly, everyone, for everyone that's watching, if you would please hit that thumbs up button for me. Just real quick. Take an extra second. Do that for me. Help the channel, support the algorithm, and saturate that some thumbs up button. Good stuff. Cool. Our traders will see you this week in the trading rooms. Bye.